Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. In this video, we're going to be taking a look at gold. We did take a look at this in yesterday's week ahead analysis video, but we didn't quite go into too much depth. So I'm going to go and take a bit more of a technical outlook on it in this video, so stick around for that. But first, let's talk about some fundamentals and what fundamental drivers could be impacting gold this week. We obviously have the Federal Reserve interest rate decision this week. Market participants pricing in the potential for the Fed to hold interest rates at the 5.5% level. It's the press conference after is what I'm really interested in, and how the Fed are going to talk about future guidance. Is it going to come down to a hawkish pause? Is it going to be a dovish pause? Some recent data that's come out could lean towards more of a hawkish pause for the Fed. That could then help the dollar strength continue into the markets. Now, I think where we're seeing gold in this picture is the fact that it could be a hedge against some of the volatility that could occur. Now, I have been looking at the VIX index. If we just jump onto that first, you can see the volatility index here. It's still really low, down at that 13 area. So it's not necessarily that we are seeing huge amounts of volatility jumping into the markets. That may change by the end of this week. But maybe it's down to more of the unknown and the uncertainties surrounding a lot of this information that we're going to get out. Not only do we have that Federal Reserve interest rate decision, but we do have other central bank interest rate decisions as well. Swiss National Bank, Bank of England, Bank of Japan even. So there's going to be lots of this high impact data coming out. We also have US CPI, US PPIs, things like that. And pound PPIs as well, CPI, sorry. So there's lots of that information coming out this week. How's the market going to digest that? If there's any kind of tone of risk and risk off, then I think gold is really going to be the place where a lot of traders may be looking at as an option outside of the sort of forex, I should say, currency pairs. We're going to be looking towards that commodity. So let's have a little look at it as a technical breakdown. Those are the factors that could influence the price of gold. On the weekly chart is where I'm really kind of seeing that sort of potential upside coming from. Last week we had a really sort of shallow pin candle form, rejecting in and around that $1,900 area. We've already today broken through that weekly high. Is that going to kind of give us that sort of reason as well behind the potential move higher? We did point out in the week ahead analysis video yesterday this trend line resistance that's following through here. That has developed from the high back in the 30th of April, and it extends down into these highs here in July. And as we've kind of expanded that down, we're now starting to see a real potential strong confirmation break here of that coming up this week. I think that if we are going to see any kind of upside here, then the market is going to target these kind of key areas and key highs. Obviously, the one that I really like the look of is this 1980 spot 50. That was a considerable high that formed. So if price is going to try and test anything, I think that's the one it's going to head towards. If we obviously trade through that level, then it opens up the door to the $2,000 barrier again on gold, which would obviously be quite significant in the markets. Now, the other kind of thing that I like to look at is when we do see these kind of weekly sort of impulses and retracement phases. Let's say this yellow line is that. If I just grab a purple line here, within that, what I like to look for are the sort of trends within it, depending on what kind of phase that we're in. So I would be expecting potentially the fact now that the market could now start extending higher. If I go down to a 4-hour time frame, for instance, we'll see that the market is starting now to create higher highs and higher lows. So we've consolidated in at that $1,900 level with broken higher. We've consolidated again back at a familiar high around about the sort of that $19-30 area. We're now starting to break out of that even. So what I think we're going to get this week from gold is these type of situations. We could get an impulsive phase, a retracement phase, or sort of a consolidative phase, and then a potential continuation. 1953 is obviously going to be a little bit of a sticking point. It was in the past, but this is that area, that 1980 spot 50, where I think if we do see any kind of uncertainty and unknowns following on from this week, that could really affect the price of gold moving back to the upside. We also have to look at the flip side of that. If we are wrong and, you know, the bias is wrong and we have to change our bias pretty quickly, I think then sellers are going to really be interested below $1,900. I think if price was to trade anywhere down towards that area of that $1,900, let's just go flick back to the daily time frame. You can see here a break below this area would instigate some selling pressure down towards that 1810. So that's the only way I can kind of see if we were going to see any kind of rejection, some selling pressure coming in, maybe a dovish tone from the Fed could, you know, bring that sort of gold price back down. Then, you know, the sort of less uncertainties will probably see flows away from the commodity. But any kind of uncertainties in the market, I think, is going to be the driver behind gold. 1980 spot 50 could be on the cards this week. Thanks for watching this video update. I really hope you enjoyed it. If you did, leave it a thumbs up. Subscribe to our YouTube channel to see some more of our forex trading content. I'll see you in a live stream tomorrow. See you then.